Hello, my dear students. Lucas Commerce Academy, the power of accounting welcomes you. In previous video, we have started depreciation. Okay, so let me give you a recap. Depreciation means the gradual decrease in the value of asset due to use. There are certain methods for calculation of depreciation. Out of these methods, the first one is fixed installment method. Under this method, the amount of depreciation is fixed or constant for each and every year till the end of the life of the asset. Under this method, we are using two formulas for calculation of annual depreciation. The first one is annual depreciation equal to cost of asset into rate of depreciation by 100. So cost of asset means original cost of purchase plus transportation and installation charges incurred. Then rate of depreciation directly given in the problem by 100. The second formula is annual depreciation equal to cost of asset minus scrap value by estimated life. Okay, so cost of asset means original cost of asset plus transportation and installation charges. Scrap value means the value which is realized at the end of the life of the asset, then by estimated life in number of years. Okay, estimated life means the number of years the asset works in future. Okay, good. So these are the things we have discussed in previous video. Now we are going to problem on fixed installment method. Okay, so let us see. The problem is MR traders purchased a machinery on 1/1/2020 at a cost of rupees 1 lakh. So here the cost of asset 1 lakh and spent 20,000 for its transportation and installation charges. Okay. Next one, depreciation is provided at 10% per annum. So that means rate of depreciation directly given to you. Then use first formula. Straight line method. The books are closed on 31st December every year. So this is the very important. So first you scan the problem, then you decide when the books are closed. That is the very important date. So here books are closed on 31st December every year that means every accounting year starts with January 1st and ends with 31st December. Then prepare missionary account for first 4 years. So we are preparing missionary account for first 4 years. We are asked to prepare the missionary account for first 4 years. Let us have some journal entries. So the first one is take. So asset is purchase, missionary purchased. What is the journal entry for purchase of asset? Missionary account data to cash or bank account, or missionary account data to bank account. Next to installation charges, same entry, missionary account data to cash or bank account. Then depreciation is always provided on the last day of the accounting year. So that means 31st December 2020, we are going to provide depreciation. The journal entry for this is depreciation account data to missionary account. Okay, so these are the journal entries we are going to pass, and the same journal entries are posted in machinery account. Okay, so take first one. So MR traders purchased a machinery on 1/1/2020 at a cost of rupees 1 lakh. The journal entry for this is machinery account data to bank. So date column 1/1/2020. To bank account 1 lakh. Then on the same date, we spent 20,000 for transportation and installation charges. The same journal entry, missionary account data to cash or bank account. Same date to cash or bank account. Within bracket, transportation and installation charges. Okay. So transportation and installation charges. So that means the total value of asset is 1,20,000 and not 1 lakh. Okay. Then, so from 1/1/2020 to 31st December 2020, no further transaction takes place. Okay. Good. Then we are going to provide a depreciation on the last day of the accounting year. So here last day 31st December, we are going to provide depreciation on this date. So the journal entry for this is depreciation account data to missionary account. Missionary account credit side. So the formula for this is cost of asset. That means 1,20,000 into rate of depreciation by 100. So 12,000. Then machinery account is to be balanced. How to balance? First to check which side is more. So debit side is made total 1,20,000. The same is transferred to this side 1,20,000. So from 1,20,000 deduct 12,000. That means 1,08,000. So this is by balance C by D on the last day of the accounting year. Then brought forward to next period. That means 1/1/2021 to balance B by D 1,08,000. Okay. So then in 2021, no further transactions takes place. Then we are going to provide a depreciation on 31st December. So that means 31st 12 2021 by depreciation account. Same 12,000. Under this method, the amount of depreciation is fixed for each and every year. Then balance. Same date by balance C by D. That means 96,000. Okay. Next come to brought forward 1/1/2022 to balance B by D 96,000. Then from 1/1/2022 31st 2022 no further transaction takes place. Then we provide depreciation on the last day of the year 31st 12 2022 by depreciation account, same 12,000. Then balance. That means balance 84,000. Same date. Then brought forward to next period. $84,000. No transaction takes place from 1/1/2023 to 31st 2023. Then we provide depreciation. Same date 31st 12 2023 by depreciation account 12,000. Then balance. Same date by balance C by D. So that means 72,000. Then brought forward to next period 1/1/2024 to balance B by D 72,000. So we are asked to prepare machinery account for first 4 years 1, 2, 3, 4, 20, 21, 22, 23. So that means 1, 2, 3, 4 years. Okay. So the balance is 72,000 is the final answer. Okay. So this final answer we can also get straight away. So that means cost of asset how much? 1,20,000. So amount of annual depreciation 12,000 into 4 years 48,000. So then 72,000 is the final answer. This is very shortcut. We get the same figure. So this is the procedure for preparation of machinery account. Okay. So the entry for depreciation is depreciation account debtor to asset account. Okay. Then the amount of depreciation is to be transferred to profit and loss account at the end of the year. Okay. So that's all. This is the procedure for doing the problem. Okay. Cool. Suppose if the machinery purchased in the middle of the year, if the machinery is purchased in the middle of the year, what should be done? What should be done? Take same example. MR traders purchased a machinery on 1/7. Okay, 1/7. Okay, so 1/7/2020 purchased on 1/7/2020. Then what should be done? So here we have to provide a depreciation from 1/7/2020 to 31st 12/2020. So that means we are providing depreciation only for 6 months. That means here 1,20,000 into 10 by 100 into 6 by 12. So that means here 12,000 half 6,000. But for the second year, the asset is used for full year. That means 12,000 depreciation. Third year also 12,000. Fourth year also 12,000. So the amount of depreciation for first year only 6,000 when the asset is purchased on 1/7/2020. Suppose if the asset is purchased on 1/4/2020, 1/4. So if the asset is purchased on 1/4/2020, how to calculate depreciation for first year? So here the depreciation is provided 1/4/2020 to 31st 12/2020. So that means 1,20,000 into 10 by 100. That means April 1st, 9 months. So that means April, May, June, July, August, September, October, November, December. 9 months depreciation. 1,20,000 to 10 by 100 into 9 by 12. That means 9,000. So that means yes, exactly 9,000 depreciation. But for the second year 12,000, third year 12,000, and fourth year also 12,000. Okay. Suppose if the asset is purchased on 110. Suppose purchased on 1/10/2020, then how to calculate depreciation? So here the asset is used October, November, December only for 3 months. That means the depreciation is provided for first year only for 3 months. That means 3 equal to 3,000. Okay. For second year 12,000, third year 12,000, fourth year also 12,000. So this is the procedure when the asset is purchased in the middle of the year. Okay, got. So when asset is purchased, what is the journal entry? Asset account data to cash or bank account. When erection or installation charges paid, what is the journal entry? Machinery account data to cash or bank account. Then depreciation is provided on the last day of the accounting year. The entry for this is depreciation account data to asset account. Then the amount of depreciation is to be transferred to the profit and loss account. Okay, got. So this is the problem. Okay, next we will discuss another problem in next video. Until then, thank you very much.